Hi, everybody. My name is Mike Evers, and I am OrthoWorld's Senior Market Analyst. I just recently finished my work on the 2023 edition of our annual report. And what I wanted to do today is share with you some of the results and takeaways I gleaned from that process in a sort of state of the orthopedic industry. Before I do that, though, I want to thank our sponsor, Carpenter Technology. Carpenter Technology offers a diverse alloy portfolio of titanium, cobalt, and steel-based material solutions for medical devices to improve patient outcomes. Carpenter Additive provides manufacturing solutions including alloy development, powder atomization, additive manufacturing process optimization, HIP services, and complete traceability to de-risk innovation and accelerate development. Thanks again to Carpenter Technology for their support. Okay, we have a lot to go over today. I'm going to keep things at a high level throughout in the interest of time. I'd encourage you, if you want more granular information, to check out the Orthopedic Industry Annual Report, all the great content that we have on orthoworld.com. For our session today, though, we're going to split things into two sections. In part one, we'll look at the performance of 2022 and some of the key drivers there. We're also going to skim the wave tops for some highlights on each segment and groups of companies. In part two, what I really want to do is talk about three of the many trends that we think are shaping the near-term future of orthopedics. And then we're going to wrap it all up with a look at how we think 2023 is going to play out. Okay, 2022 overall performance. Let's take a look. If I had to sum up 2022 in orthopedics in one sentence, I would say the orthopedic market improved. You can see that we estimate that 2022 grew by 3.5% to a worldwide total of $55.5 billion in sales. What does that look like? What was that environment like for 2022? Well, if I had to sum that up in a word, I would say dynamic. And if you wanted a couple more words, I might add complex and varied through time, region, and segment. But thinking of it overall, some of the things that really jumped out to me, or that I remember very clearly of 2022, is the disruption in supply chain and staffing. Those both improved throughout the year, but I think they were very much headwinds in 2022. We saw overall procedure volume improvement throughout the year, but it wasn't evenly distributed. Joint replacement starting in the second half of 2022 really accelerated after a couple of years of lagging recovery. But over in some areas of spine and trauma, we saw some volume softness. And then, of course, national tenders in China for volume-based procurement were significant headwinds for highly globalized companies that play in joint replacement, spine, and trauma. All right, so here's kind of the big section, the big chunk that we're going to dive into right now. We're going to look at each segment and how it performed in 2022. I really encourage you to check out the annual report where each of these segments gets a dedicated chapter. Let's start with joint replacement. Joint replacement grew 4.7% to a worldwide total of just over $20 billion. Joint replacement, as I mentioned, in the second half of 2022 really started to get back on track after more than 2 years of lagging the rest of the industry in recovery. However, offsetting some of that volume recovery was volume-based procurement in China, which reduced prices between 80 and 85% for hip and knee implants. The other thing about joint replacement that we're really thinking about is the nature of the backlog. So look, if joint replacement has been depressed for more than 2 years, it seems reasonable that there is this group of patients that are waiting to get their surgeries. But I think the question comes in is, when do they enter that funnel and how quickly can they be processed through that funnel? Because unlike previous recoveries where maybe a couple of years ago we'd have a COVID surge, procedures kind of shut off for a couple of weeks, and then in that next quarter we see a really aggressive ramp to recover where basically the entire healthcare industry is working in overdrive. That is not the case anymore. So it's an open question of how much this backlog is going to influence volumes going forward. We estimate that spine grew about 2% to a total of 9.8 billion, making it the single largest segment that we cover. Two really notable merger acquisitions in spine, with Orthofix and C-Spine merging, and then the still pending Globus acquisition of NuVasive. C-Spine had been one of those mid-tier companies that we talked often about, along with ATEC, who are really, based on their concentration on the spine market, really growing well above the market. Of course, C-Spine merges with Orthofix, but ATEC is still humming right along with incredible growth quarter after quarter. And I don't see really many signs of them slowing down as they continue to take share from competitors. Also in spine, one of the things that we're thinking about is as fusion slows down or decelerates in its growth, what are some of the new markets like minimally invasive surgery and motion preservation that are going to fuel spine growth in the future? Trauma, as I mentioned, had some areas of softness in 2022. We think it grew 2.9% to just over 8 billion globally. There were some areas of transient softness aggravated by volume-based procurement in China, which was a real headwind for companies that play in that market. But Paragon 28 CEO Albert DaCosta recently called the foot and ankle segment, which we put mostly in our trauma segment, he called the foot and ankle segment the last remaining gem in orthopedics. And that's really down to the diverse nature of that specialty, a lot of subspecialties within it, a lot of room to improve the standard of care in many of these procedures, and a lot of really underserved markets that can fuel growth well into the future. And then Smith & Nephew had some existing operational problems even before the pandemic, but the pandemic really supercharged many of those. And one of the stats that I found eye-popping during the years, Smith & Nephew said that some of their trauma reps spent 40% of their time managing logistics and managing inventory. So as you can imagine, really difficult to compete when your reps are saddled with that kind of inefficiency. But Smith & Nephew has a 12-point plan, many of which are focused on their orthopedic business to get things turned around. And it does sound like they're pretty far down the road on improving many of these areas. Sports medicine grew 4.2% to a total of 6.3 billion. And one of the hallmarks of sports medicine in our quarterly coverage is this intense focus from the largest orthopedic companies now. As large mature segments begin to decelerate, these companies are looking to new higher growth areas where they can leverage their size and their presence. This was true throughout the industry, but supply constraints on a lot of things. But in this particular case, chips really hampered enabling technology, and specifically in sports medicine, Smith & Nephew and CONMED both felt those supply constraints in their sports medicine enabling technology business. And the other thing that I found really compelling about sports medicine is the improving technology in terms of network connectivity, wireless connectivity, camera sensor technology that has a potential to free a lot of these instruments and tools from cords and wires, which we think can push many of these procedures into lower cost settings, maybe even a doctor's office under local anesthetic. Moving on to orthobiologics. That segment grew 2% to a total of 5.3 billion. Orthobiologics is a really diverse segment, a lot of companies that span across a lot of segments in the industry. But one of the hallmarks of orthobiologics has been a lot of activity in terms of development and product launches. And 2022 was really no different. We got some early usage milestones out of new products from companies like Biogenics, Orthofix, and Bone Cement. And then speaking of Orthofix, I think one of the more interesting aspects of the merger with C-Spine is taking two ends of a biologic spectrum in C-Spine's DBMs and Orthofix's higher priced cell-based therapies and bringing them together. Now, the company has framed this as offering more choice in an industry driven by surgeon preference, and that certainly makes sense to me. However, I think it'll be interesting to see how those two ends of the spectrum evolve and coexist going forward. The other big thing that happened in OBio for 2022 is a reimbursement shift in hyaluronic acid products from wholesale acquisition cost to average selling price. And really the end result of this shift is that it became a significant headwind for companies that were reporting under wholesale acquisition costs, such as Bioventus and Zimmer Biomet. And then finally, we have our enabling technology segment, brand new for this year. We just launched it in Q1 of 2023. We estimate it grew 8.1% to a total of 1.2 billion. Now that 8.1% growth is a little deceiving, especially off of such a small base. But one of the main things that happened within the last couple quarters is this shift from upfront sales of capital technology to more rental agreements or earn-out agreements that are based on volume or market share. And that really took a lot of the upfront money and spread it over future quarters or refunneled it into implants. Really, the game right now for enabling technology is to drive adoption. Enabling technology in orthopedics gets a lot of press. I am certainly part of that. But as we'll see later, adoption is pretty low and stagnant. So that, like I said, the game right now is to drive more adoption. And one of the ways that companies might be able to foster that adoption and cross over into the mainstream is through patient monitoring. And we'll talk more about that in a coming slide as well. Okay, so that wraps up our segments. Now, we're going to take a look at company highlights. And of course, with so many companies doing so much every year in orthopedics, it's impossible to do a fair survey. So what we're going to do for now is take a look at companies grouped into revenue buckets. So let's take a look. This slide is the same slide that we saw earlier in the presentation. It's orthopedic sales by year. And over here on the right, you can see 3.5% growth on 55.5 billion. But what I did is I stacked the contribution from each of these groups of companies based on revenue size. And as you can see in the light green, almost exactly 2/3 of the entire industry is generated by just the 8 companies that generate over $1 billion in sales per year. So an immense gravitational pull from these companies. But based on these tiers, let's say, what are some of the highlights within each of these tiers? For companies over $1 billion, the one that really stands out to me is Globus Medical deciding to acquire NuVasive. Now, I don't think anybody was surprised that Globus made a large acquisition. They had been signaling that for some time. But I think many of us were surprised that it came within spine, sort of doubling down on spine, really going after that scale. But Globus has its work cut out for it. If this transaction is completed and the integration goes forward, they are going to have to buck a trend of really rocky integrations in spine. But based on Globus's performance over the last several years, I think they deserve the benefit of the doubt. I mentioned previously that Smith & Nephew had some pre-existing problems that really exploded with the pandemic. And there's always been this sense that Smith & Nephew had a better portfolio and market position than their results might indicate. So I think now that they're taking a wholesale approach to addressing many of these problems, as I mentioned earlier, several of them orthopedic focused. I think Smith and Nephew has a very important 2023 ahead of it. And then I mentioned that the changing capital acquisition model, where the upfront sale has largely gone away and it's based on share agreements or rentals. In the 1 billion and over category, that's primarily where that impact is felt. As we move over to companies between 400 million and 999 million, it's really, for me, the ascent of Innovis, who've been so aggressive with their M&A activity and so successful with their M&A activity in recent years to build out new businesses in high growth areas. And they're really well positioned in some key areas like the ASC and like in shoulder and now enabling technology that I think Innovis has, they will be into the 1 billion tier sooner rather than later. The next two companies, however, are going in the opposite direction, at least for now. ZimVie, after its separation from Zimmer Biomet, really is looking at a long-term play in its turnaround. It has spent the last several quarters right-sizing itself, getting out of unprofitable markets, simplifying its portfolio. And really, for ZimVie, it's about using its fusion business in spine to fund MIS and motion preservation growth in the future. Bioventus had a rough year. There's really no other way to put it. Bioventus came out of its IPO a couple of years ago, firing on all cylinders, made a couple quick acquisitions that seemed to do very well for them. But as we get into this year, they had funding problems with their attempted acquisition of CartiHeal. They got hit with the HA reimbursement shift, and now they're going to be in the middle of an executive search for their next CEO. So like Smith & Nephew, an important year coming up for Bioventus. Moving one tier down into companies between 200 and 399. For now, at least for the moment, this is where ATEC lives. That they will be graduating out of this tier very quickly. But a lot of their success is based on their pure focus on spine. And Pat Miles has said, we're not a division of a division. And really that has paid off for them immensely quarter after quarter with their well above market growth. Medartis, I think, deserves a mention because they had really strong growth, almost 17% in 2022. And they did all that in the face of some significant headwinds like COVID in some of their key markets, staffing shortages in some of their key markets, and they also left China because of volume-based procurement, but still able to drive really strong growth. And then Microport is sort of the flip side of that volume-based procurement coin, where they were able to, through the tender process, significantly increase their market access. Within joint replacement, and this is counting by hospital number, Microport increased its joint replacement access by 10% and then doubled its access within spine and trauma. Finally, companies between 100 million and 199. A big one for me are the foot and ankle companies, Paragon 28, Treece Medical. And like ATEC, their focus on that segment has really won them share and has them growing well above their competitors in foot and ankle. And I also want to mention Anika Therapeutics, who, like Innovis, has expanded their target market greatly through acquisitions in recent years. And they are very well positioned in a lot of fast-growing markets to have, I think, really impressive future growth. And just one example for Anika is their continuum of products around the shoulder that I think is extraordinarily compelling. I mentioned a couple slides ago that the environment is dynamic and complex and varied. And I just want to call out RSV cases. So we started 2022 with COVID in Q1, a big COVID overhang. But as we get to the back end of the year, especially within pediatrics, these RSV cases really hurt volume. And the other thing to know about pediatrics is the staffing shortage there is much more acute. According to orthopedics, they're dealing with a subset of the staffing problem where, because in some of these highly complex pediatric cases, that staff requires extensive training and has extensive experience, not easily replaced. No easy answers there for orthopedics and other companies that are competing in that space. All right, so let's wrap up our 2022 discussion with the big picture takeaways. As a reminder, 3.5% growth to a worldwide total of $55.5 billion. The big factors and drivers: supply chain disruption and staffing shortages that improved, but were still headwinds. We saw improving volumes for some procedures like joint replacement, followed by softness in some areas of spine and trauma. And then, of course, volume-based procurement in China, a significant headwind in 2022 that'll continue into 2023. Okay, so we're in the home stretch now. So got that big lift out of the way. We're going to shift over to looking ahead a little bit at these three trends that we think are helping shape orthopedics. Number one, the pivot to digital. Number two, the M&A and IPO landscape and the consolidation within orthopedics. And number three, the acceleration of outpatient orthopedics. Here it says ASCs just for space, but we should understand that this is the general shift of procedures out of the hospital. And then, as I said, we'll wrap it up looking at our forecast for 2023. Starting with the pivot to digital, trend number one. I think the easiest way to determine where device companies stand on the shift to digital is to look at where they're spending their R&D dollars. We've heard previously from Medtronic that a quote-unquote disproportionate amount of their R&D is towards digital initiatives. And Zimmer Biomet is on record as saying 70% of their R&D spend is towards CB Edge, their digital ecosystem. And it makes sense. If we look at the technology that is in the market today, we see its ability to stabilize pricing, to improve product mix for these companies, and to drive share for these companies. But that's where it gets a little counterintuitive, because when we look at the adoption rates currently in the market, they're low and they're stagnant. Our best guess is about 20% of joint replacement cases use technology of some kind. If we limit it to robotics, about 11% of joint replacement companies use robotics. 11% of joint replacement cases use robotics. As we shift over to spine, those numbers go down. 18% of spine cases use some kind of technology, and just 3% of spine cases use robotics. So there's this gap between the early adopters have come in, and they've been in, but it hasn't really grown from there. And there's this gap that we're looking at where technology needs to cross that gap to enter mainstream orthopedics. One of the ways that we think that's going to happen, or at least a contributing factor, is the importance of data as companies with technology, as they build out their ecosystem and they're surrounding procedures with technology, that's generating enormous troves of data that companies are now becoming more adept at collecting and harnessing. So if you think about something like Zimmer Biomet's recovery curves that they released recently, where as they get a couple hundred patients into their ecosystem, they can monitor those patients. As that population grows to a couple thousand, you can start to make some diagnostic observations. But as that group gets into tens of thousands through AI and other tools, now it's opening up predictive analytics. And that's something that I think Zimmer Biomet has implemented very elegantly into their ecosystem. So let's talk about robotics for a second. This slide here is based on research from Wells Fargo, and it's looking at US joint replacement robots, the install base, so that the running number of robots in US joint replacement. And you can see here at 2022, we're at about 2,700 units in the field, expected to grow over 6,000 to over 6,000 by 2026. And an important thing to note here is that this model doesn't or came out before Smith and Nephew said that they intend to place 300 Cori robots every year. So these numbers could be substantially higher. However, as I mentioned earlier, we think about the current usage. For robotics to grow to this extent, you'd think usage has to increase. And one of the ways companies like Zimmer Biomet are doing that is they're making it extremely easy for a hospital or an ASC to get a robot. Brian Hansen laid this out way back in 2009, where he said the game is driving the robotic procedure, that robotic procedure adoption is the annuity that everyone in the industry wants. For all those reasons I mentioned earlier, the mixed benefit, the disposables, the service contract, the pull through to your implants. But I also mentioned previously that the market is dynamic, complex, and varied. So if we look at Globus Medical and their spine robotics, it's not really impacted by this shift in acquisition models. This is looking at Globus Medical's reported enabling technology sales by quarter going all the way back to late 2017. And we can draw an almost perfect line through Q2 2020, where the pandemic really came on in the depths of the pandemic. In that pre and post average, Globus has really driven sales of their enabling technology in a way that others, especially those in joint replacement, haven't been able to as the models have shifted. So just all this to show you that Globus Medical and some others may not be as beholden to this shift as others. All right, so moving on to our second trend, the M&A and IPO landscape. I talked about a couple of the notable deals that we saw recently, whether that's C-Spine and Orthofix merging, Globus Medical acquiring NuVasive, or the many deals that Enovis has carried out. But despite all those notable deals, overall activity declined in 2021, 2022, and is on track to decline once again this year in 2023. One of the interesting things about that, though, is despite the overall decline, some companies are still highly acquisitive. Enovis is really the example I'm thinking of here. And one of the things they said that is very interesting is they view M&A as a core corporate competency. And that one of the lessons that they learned is that so many integrations fail because companies don't do M&A on a regular basis. Enovis does them on a regular basis. They have a highly successful track record and an obviously very effective playbook to do that. One of the things we heard, given the sustained market disruption from a couple analysts, is that the IPO market is essentially ice cold. It was that last batch of orthopedic IPOs that included Paragon 28, Treace Medical, Bioventus. After that class of companies slipped in, the door shut pretty tightly until yesterday, at least, when we had Monogram Orthopedic go public and net, I think, 17.5 million in their public offering as they attempt to disrupt robotic knee replacement procedures. But as we think of the overall funding environment, whether that's private investors, whether that's large companies looking at early stage companies, there's been a shift away from the growth at all cost mindset. And now the thing that folks are looking for is a viable path to commercialization and a viable path to some kind of profitability. Here's a look at that declining activity. So what we're looking at here is by year, the number of orthopedic M&A transactions. You see the peak there in 2020, followed by a steep decline to 2021. And as I said, at least through 5/9 of 2023, we're on pace to fall short yet again this year. However, if we just look at 2020 on, we see that there are some highly active companies, with Enovis leading the pack pretty comfortably. And much of that was built off of the back of them standing up a foot and ankle business really rapidly. And then they also expanded geographically with their acquisition of Mathys. Based on that, though, I don't think it would be any surprise if we looked at all of the transactions from 2020 on. We see that the two most popular segments for activity are trauma, which is, as I said, where we put a lot of the foot and ankle market, and digital. And as a quick reminder, if this M&A data is something that you can see yourself using or you're interested in, I want to remind you that we have a orthopedic M&A tracker that goes all the way back to the 90s, including where available, valuation, the deal total, as well as segments involved in the deal. You can buy that on orthoworld.com. And if you're an elite member at OrthoWorld, you already have this. You can just go to My OrthoWorld on the website and download the tracker. Our third and final trend looking forward is the acceleration of outpatient orthopedics. This is an undeniable trend. I don't know that you can find anyone that could credibly say that this isn't happening, but I think where there's some nuance is how quickly it can happen. I still think there are physical capacity constraints, just not enough ASCs and outpatient centers to accommodate the explosion of procedures that we're all thinking is going to happen. There's also reimbursement questions. Improved reimbursement in the ASC for hip and knee is pretty relative on the grand, or pretty recent in the grand scheme of things. And there are some procedures that are really good candidates for the outpatient setting that just don't have the reimbursement to make it viable yet, like in shoulder. However, ASCs are already exerting significant influence on design considerations, whether that's for software, whether that's for implants and the streamlining of instrument trays, or enabling technologies that play well with the constraints that are inherent in the ASC or outpatient setting. And also, the largest companies in orthopedics see where the trends are going. They're preparing just like everyone else, and they have a unique advantage where that they can actually help build that capacity. Their broad portfolios can cover usually everything you're going to do in your ASC, and they can contract in an integrated, consolidated way. All right, so our last slide here, expectations for 2023. When I put this together, I was thinking 3.4% growth up to 57.3 billion globally for the orthopedic market. As we're here kind of towards the halfway point of 2023, we've only gotten the official Q1 results from public companies so far, but this might be a little low because the recon market is running really, really hot right now. I think as I looked at public companies that are in knee replacement, it was something like 13% growth year over year, but that is deceptive. The first quarter of 2022, really, really weak comps, a lot of COVID overhang happening there. So it's a bit of a question to how durable this recon tailwind is. And I think we need more than just one quarter of results to make that determination. You can get a sense of what the companies are thinking, however, even based on this strong Q1, of the companies that raised our guidance, no one made substantial upgrades to their guidance. And then a lot of companies, even though they had a very strong Q1, chose to stand pat with their previous guidance. And I think that's down to the lingering economic uncertainty. And as I mentioned previously, volume-based procurement was a headwind last year, and it has rolled over to this year and potentially beyond for a couple segments, including joint replacement, spine, and trauma. That's all I have for you today. Thank you so much for listening and spending your time here with me. Once again, thank you to Carpenter Technology for sponsoring the State of Orthopedics. Of course, if you have any questions about what we've talked about here today or something you see in the annual report, I always welcome comments and questions. You can reach me at evers@orthoworld.com. We'll see you next time.